Hello and welcome to today's update on Wednesday. Not particularly active in the market so far this week. The chart I'm highlighting here is the DAX, which did suddenly get some movement, produced a UFO. That in its own would not be overly interesting. The thing that was that we closed below the third range deviation pivot down, which shows an expansion of range. So, considering what happened elsewhere, it was out of sync. Be interesting to see whether we get a gap lower today, because that would open up the possibility of what's called nylon reversal, and as a technical signal, that would be significant. Also, on the half-day chart, which is also alerted some comment from us, is the fact that this half-day level, which dates all the way back to September, all the way down here, has moved to the top of the trend. What this does is qualify the gap higher yesterday and suggest that it's an exhaustion gap. A lot of nonsense written about gaps, beautiful hindsight indicator, oh yes, it was an exhaustion, it was a breakout, it was a continuation. You need to have some tools to tell you what's happening at the time, otherwise it's as much use as a chocolate teacup. The fact that that has happened gives us the confidence to say, right, this is an exhaustion. So keeping a close eye on the DAX. The Australian dollar's been a short position that we've had all the way back up, way up here in the 79s. Hasn't done much in the last week or so, but late yesterday it held the final support at 76.25 to the tick. So when that happens, that's a warning to us, and the fact that we've not taken out that low while I've been asleep means that we're going to take another third of that short position off and book some more profit from the short at 79.09 down here, pretty much at the price now, so 76.55. Our long-term target remains 75.25, which is a big historical level, but let's wait and see. Sugar's been on our radar screens for a while now. It's forming a base. What we needed to see was a close above 15.01 at the end of last month, which didn't happen. It stopped just short. It is trying to break out again, so what we'd like to see is a move higher and then it come back to this support and hold. So sugar's on our radar screens this afternoon. As is the pound. What's really getting us potentially active here is the fact that everything has moved below price. So we have a very condensed area, a very, very strong support zone at 31.33 down to 31.09 with 31.22 in the middle of it, and lots of space above. So the pound very much on our radar screens for the rest of this week. Final support held just about last week on 30.70 on that interest rate rise, but a dovish comment. So close eye on the pound. Finally, on stocks and our way of analysing sectors, we've been bullish of oil and gas for quite some time. Obviously got that crude breakout, so been interested in some individual stocks and also sectors. And the number one sector has been games leading up to Christmas, and ATVI is one of the major ones in that area. Their results came out on Thursday. This is classic crowded trade behaviour. They beat in a big way, but we got a UFO and a slam dunk. What we needed to see is to close below 60.36, because then that opens up the downside. And if we look at EA Sports, we have a very similar situation. So they also beat their results for a while ago now, but we haven't taken out this final support of 110.31. So game sector very much on our radar screens. Finally, just looking at bonds, we've talked about treasury bonds for some time now. We had the buy signal at support about 10 days ago, and we've just been up every day actually, 1, 2, 4, 8, 9, 10 days in a row. We are now getting pretty close to our reversal area, so that begins at 150, let's just get it, 154.28, 155.01, and the next one at 55.05. 531. So Treasury bonds hitting our radar screens as well. Okay, that's it for today.